Isn't it crazy how just a single line by Jerome Powell can move the market, even though interest rates might not get affected?
In 2020, I remember at the Jackson Hole Symposium, Jerome Powell was talking there. It was pretty widely expected that he's going to say that we've stopped targeting inflation, and gold went absolutely through the roof.
Many people just see on the chart a big candlestick or a big move happening on the market and they just jump on it. And by that time, most probably it's too late.
There's one, I suppose, really obvious historical example of a surprise.
The immediate effect of it was that Swiss stock exchange almost collapsed.
When you have a surprise like this, what do you think are some of the options that you might consider doing?
The number one rule in such cases, don't chase the wave.
Hello and welcome back to Trading Talks. Last episode in this series about central banks and monetary policy, we're talking about the forward guidance of central banks. If you haven't watched that yet, I would encourage you to check it out. And now in this episode, we're going to be looking at surprise changes to rates with a historical look at a few examples, looking at how this might pan out in the future and its influence on various charts, and also considering the sentiment and the context that's involved within these decisions. If you've not done so already, I would encourage you to subscribe to Exness's channel, turn on notifications so you can be aware immediately when the next podcast in the series is coming out. And today, let's get on with it. I am Michael Stark, Financial Content Leader, and joining us here is Antreas, Themistokleous, Trading Content Specialist.
Hello, Michael. Thanks for having me.
Welcome, Antreas. And there's one, I suppose, really obvious historical example of a surprise change in rates. But let's see. What do you think are some of the most prominent examples that you would like to highlight of when central banks have surprised, and what has been the effect of that surprise in practical terms on markets?
So the first one that comes to mind is the Swiss National Bank.
Bingo.
Back in January 2015, they removed the trading floor with euro. So what that means is that the price of euro to Swiss franc couldn't go lower than 1.2. Now, in January of 2015, they removed that. So the immediate effect of it was that the Swiss franc soared 30% intraday, which was a massive move back then. And Swiss stock exchange almost collapsed. Right? So that was one unlocking of the Forex pair, let's call it. Right? Now, the next one is the Fed's double cut. I mean, 2 times cutting back in March of 2020. They cut 50 basis points in early March, and then 2 weeks after that, on a Sunday, they cut another 50 basis points. So that dropped the rates down to 0.25 from 1.5, 1.75 that it was before they did that. And the immediate reaction to that was that the S&P futures hit the limit down, but ultimately it sparked one of the most powerful bull runs back then. And the reason of cutting was obviously COVID-19, right? So they essentially restarted quantitative easing, injecting money back to the economy.
And that, I think, those 2 examples can lead us quite neatly into the next question, which is, to what extent are some of these surprising? How does that influence what happens later? And what I mean by that is, if you think about the Swiss National Bank in 2015, just a few days before they cut this peg, they'd reaffirmed it. They had said again, we're committed to this peg. We're not going to do anything to change it. So that came as, quite a massive, huge surprise. Whereas within the context of, for example, strongly rising inflation, most people are going to be expecting the central bank to hike rates at some point.
Yeah, that's true. Nobody was expecting that. And also, now that we're talking about it, it only makes sense for the Fed, let's say, to cut aggressively because of COVID, right? Yeah. But back then, nobody was expecting such a response from the Fed. So when surprises happen, traders usually overreact, right? Because nobody's expecting it. That's what a surprise essentially is, right? So, but usually it fades fast. So the market corrects itself, let's say. So these big sharp moves that happen over, especially around data publications or Fed or central banks interest rate decisions, it usually fades fast. So could it be that a surprise might be priced in? Probably, because what is priced in is probabilities of the hikes or the cuts, but not the actual surprise. That's why it corrects so fast.
Yeah. And I think also, and so that's something I want to pick up on briefly. You point out that markets tend to overact on surprises. And one particular example that I can remember of them definitely doing that was in 2018. The Bank of Canada, somewhat surprisingly, hiked twice in a row. But the reason that I think it wasn't such a huge surprise, and to some extent it was kind of expected, is we had relatively quite high inflation above target for quite some time, economy doing quite well. So it wasn't really all that big a surprise. And I think that kind of situation is one of the potential opportunities for people to trade, I think, and to possibly to make money in the short term, being not very surprised by a surprise, inverted commas, and then going in and doing something.
But then again, it's quite risky to do that, right? I mean, especially when you're trading the news or the publications of the interest rates, it's quite volatile. Yeah,
that's true. But I mean, I think a trailing stop is something that's quite helpful. I mean, and another example of in 2020, I remember at the Jackson Hole Symposium, Jerome Powell was talking there. And it was not guaranteed, but it was pretty widely expected that he's going to say that we've stopped targeting inflation. We have abandoned any strict target for inflation. And he did say more or less words to that effect. And gold went absolutely through the roof. Even though that's not really surprising, it's just nobody... Or at the time, I kind of felt like lots of people are thinking that's totally crazy. He's not going to come and say that they've abandoned inflation targeting because inflation is going to go insane.
Isn't it crazy how... just a single line by Jerome Powell can move the markets, even though interest rates might not get affected.
Yeah, exactly.
Just stating something can just move the whole market.
Yeah, exactly. Can have a huge input. And that's something that if you want to find out more about it, you can read the article which is linked in the description on Exness Insights. Is discussing more specifically about how these surprises can affect Forex and stock markets. So what I would also like to know is what would you not necessarily suggest, but what are some of your tips, or what is your personal typical game plan when you have a surprise like this? What do you think are some of the options that you might consider doing, or some of the strategies used to at least keep afloat?
Yeah. The number one rule in such cases where we have surprise by the central banks is don't chase the wave, because most probably you're going to get drowned in the wave, right? So what I personally do, first of all, I never trade news. I mean, I just wait for that first wave to, settle, and then build my positions on the second wave. Maybe wait for a retracement or a pullback or a better price, if you wish, to whatever you're trading. So that's it. Just don't jump on the first wave. It's usually emotional. It creates chop moves in the markets. So just try to avoid that. As long as you wish to jump on that, big candlestick, just wait it out.
Mm-hmm. Yeah, okay, that makes sense. I mean, it's good. It's nice the way you explain that. I personally am not sure I would necessarily agree, because I think it depends on the degree of impact of this decision. Because it's something like the Bank of Canada, okay, it's a surprise, but it's not really all that important for the grand scheme of global markets. It's not going to be that big a movement necessarily. Whereas also in other situations, like the abandoning of the targeting for inflation in 2020, that's a huge, generational impact. Of course, we've seen the impact of that in the next few years. So, I mean, I agree with you, definitely. But I mean, as somebody who likes to trade the news sometimes, then I think as long as you're kind of level-headed and you know when to say, okay, that's enough for one day, then it can be worthwhile to do that.
That's the issue, though. Not many people are level-headed.
Yeah, I suppose. Yeah.
Many people just see on the chart and they see a big candlestick or a big move happening on the market, and they just jump on it.
Yeah.
And by that time, most probably it's too late.
Yeah. No, yes, it's quite possibly it can be in some situations. Yeah. So we need to resist the temptation and think clearly. Yes. So let's look specifically at a chart. And a chart I think I would like to look at, if it works for you, is the Fed in 2024 gold around there, if that works. Or if you can think of any other chart that you want to look at specifically in a slightly kind of like shorter, lower time frame. Because I think that would be a good illustration of what you were saying about before, where typically we can see that there is this initial knee jerk in reaction to a surprise, but then the price often retraces like quite strongly.
Yeah, so let's check on the daily chart of the dollar index, for example.
Okay.
Back in September of 2024, we've seen that after the publication, the dollar has somewhat weakened throughout the whole month, but then it rebounded in early October. So that's what I was mentioning, that initial reactions usually fade. In this case, it took like a month, but it eventually faded away and the dollar index just rebounded to the upside.
And it's also, the context is important because in that particular case, September, October 2024, active election campaign.
Yes.
That's something that we're monitoring.
That too.
And that's something that we'll be coming back to and discussing more about next time. So thanks very much, Andreas, for joining us for the podcast.
Thank you very much, Michael.
And also to our viewers. And for the next episode, we'll be talking about the context and higher for longer and how these two factors can influence each other. If you didn't do so already, please subscribe and turn on notifications so you can be immediately aware when the next podcast is released.